We have two presenters, each presenting for 20 minutes, followed by a discussion that will talk for 10 minutes, and then by general discussion for another 10 minutes. During the Q&As, please raise your virtual hand using the WebEx feature. When called, please unmute yourself and try to be brief, clear, and direct, avoiding long preambles before asking your question or making a point. We have a limited amount of time, so we would like to give everyone a chance to participate. With that said, our first presenter is Michael Weber from the University of Chicago, presenting the paper titled Diverse Policy Committees Can Reach Underrepresented Groups. Michael, you have 20 minutes, and I will give you a polite reminder when you have 2 minutes left. Please, the floor is yours.
Thank you so much, Cesar, and thanks a lot to the conference organizers for allowing us to talk about this important topic at this conference. I'm presenting some current work with Francesco D'Acunto at Boston College and Andreas Fuster at the Swiss Finance Institute in Lausanne, who for many years actually has worked at the Federal Reserve Bank of New York. Next slide, please. So we want to actually start out motivating our paper using actually a picture Christine Lagarde was actually posting on her official Twitter account when she took the helm of the European Central Bank. And so she invited her colleagues from the governing council to retreat outside of Frankfurt in the Taunus and mentioned that they had some nice informal gathering. And while I'm not on Twitter, you could actually read about it on all the media that there was some public outcry, just stressing the point that, besides Christine Lagarde, it's all white men, and whether this actually resembles an open and inclusive discussion. Next slide, please. And now, of course, as Chair Powell was actually mentioning, there are many good and important reasons why we might actually increase the diversity in important committees, but also in our profession overall. And Christine Lagarde herself actually mentioned last year what we label here a legitimacy reason that, after all, as a committee that makes decisions for the overall society, we should actually mirror the society we are serving. Sharon Donnery was instead actually highlighting the fact that if we have committee members with different experiences and backgrounds, we might alleviate the concern of groupthink and ultimately reach better decisions. Well, of course, there are very important reasons for increasing diversity. The three of us thought, actually, at least with our toolkit as researchers, what we focus on, it's maybe harder for us to empirically actually document these channels. Instead, we actually want to shed light on a channel and mechanism Jay Powell highlighted in 2018 when he said that diverse organizations are also better able to relate to and talk to many different communities. So we label this an inclusive or effective communication channel to which we actually want to shed some empirical light. Next slide, please. So what we do specifically in this paper, we ask the question whether us as researchers making salient the female or minority representation on the Federal Open Market Committee affects the extent to which different groups, think men versus women, white versus minority survey participants, would incorporate the identical information we as researchers provide into subjective beliefs about inflation, the unemployment, and the macroeconomy overall. Now, of course, using observational data, let's say, Chair Powell makes a speech. Of course, it hinders us to causally make statements how actually these speeches affect beliefs. Instead, what we do actually, we recur to or resort to a clean setting in which we actually can keep constant lots of things. And especially what we do, we run a survey on 9,000 Americans in the summer of last year. We elicit subjectives, trust and expectations of individuals in the US, in the Fed, and for employment and the unemployment rate. And then actually we randomize and make salient the female and representation of a Black male member on the FOMC to then understand whether women or Black survey participants differentially would incorporate the identical information we provide into their own subjective forecasts for the macroeconomy. Next slide. So now what do we find in the paper is we show that female survey participants and Black male and female participants that actually see the representation of a woman, of a Black male a member on the Federal Open Market Committee are more likely and more strongly incorporate the identical information into their own forecast for the unemployment rate than when they see, let's say, a white male policymaker. Instead, actually, when we look at the response of white male survey respondents in the survey, there's actually an identical reaction independent of whose policymaker they see with the forecast, documenting on the one hand that diversity or making salient the diversity in committees increases the effectiveness of what we call policy communication. Instead, however, it has no negative effect on the reaction on the currently overrepresented group of white men. And the channels through which actually this higher effectiveness occurs is on the one hand what we label a trust in the Fed channel. So we document that women and underrepresented groups actually are more likely to afterwards express a higher level of trust towards the Fed, but also they actively choose to gather information about monetary policy making. So we document that those two mechanisms seem to be at work. And then in terms of like drivers of these effects, we show that what we label a heterogeneous taste for diversity is more consistent with a pure homophily type mechanism. Next slide. So like, let me just not spend too much time here. So like we contribute to this literature on monetary policy communication. Well, there's been lots of work in the last couple of years trying to understand, whether the exact message that a central bank would send or the medium of sending, like social media versus traditional media, plays a role. I think actually we are the first one who actually try to understand whether the identity of the sender plays a role in the extent to which individuals would actually react to the message. And now I want to tell you directly a little bit about the survey setup. Next. So our survey consists of 4 parts. So at the beginning, we just elicit some basic demographics of survey participants, some prior information about monetary policy making, such as like what the inflation target is, or for example, who's in charge of setting basic levels of interest rates. But crucially also, we directly elicit prior expectations over the next 12 months for inflation and the unemployment rate. And the second part of the survey, that's the key innovation of our research. Here we just take our 9,000 survey participants, just randomly allocate them into 7 equal-sized groups. We have one control group that doesn't receive any information, just gets a short introductory text, what the Fed is, and sees the official logo. Instead, we have then 6 treatment groups. 3 groups receive information for the unemployment rate, 3 groups receive information for the inflation rate, and then 2 groups see a picture of Thomas Barkin, 2 groups see a picture of Raphael Bostic, 2 groups see a picture of Mary Daly. All 3 are regional Fed presidents. All 3 were non-voting members at the June FOMC meeting from which we draw our forecasts. Next slide, please. Just to give you an idea how those treatment screens in this online survey look like. So here I show you the treatment arm that receives the inflation forecast from the Survey of Economic Projections for 2020 and 2021 from June of last year, associated with a picture of Thomas Barkin, and we directly stress that he was part of the meeting when actually those forecasts were made. Next slide. 2 groups see a picture of Raphael Bostic, again, stressing his role and title. Here again, we see the treatment arm with Raphael Bostic for inflation. Next slide. And then 2 groups see a picture of Mary Daly. And instead here, this time we see actually the group that saw Mary Daly and also saw the unemployment forecasts for 2020 and 2021. Next slide, please. Then actually the remaining 2 parts of the survey is on the one hand eliciting the trust in the Fed via 2 complementary ways, to the extent in the extent that the Fed adequately manages inflation and the unemployment rate, but crucially also cares about the well-being of all Americans, including people like themselves in the survey. And then we elicit posterior inflation and unemployment expectations. And the way we do that is we follow the New York Fed survey of consumer expectations. So we have a full range of potential outcomes for the inflation and unemployment rate, pre-specified bins, and then we ask survey participants to allocate probability mass to those future scenarios that has to add up to 100 before they can continue. And then the last part, we elicit a rich set of observables: age, income, marital status, number of kids, political leaning, and so on. Next slide. So we do that online in cooperation with Qualtrics. We have about 9,000 respondents. we targeted an equal gender ratio and a representative population in terms of age, education, and region. We slightly oversample African American survey participants because we were concerned potentially because of lack of power, we might not find any effects. And so we wanted to make sure that in case we would not find results, it couldn't be due to lack of statistical power. And then we actually directly registered our hypothesis via the AEA registry just to make sure that our hypothesis were ex ante registered in the data. And then I'll also talk a little bit about some follow-up survey that we did 6 weeks later. Next. Like for today, I want to actually focus on the reaction of 4 groups. I want to compare the reaction of white men, white women, African American men, and African American women. And actually, just for graphical illustration, I focus on raw data patterns, comparing treatment effects, or the effect of making salient the representation of Mary Daly or Raphael Bostich relative to Thomas Parkin in the raw data. But in the paper, we show that all the results are robust in a formal regression setup, and we've actually controls for many different observables and about 65 different fixed effects. Next, please. And so now what I show you today is actually I want to focus on the share of survey participants in different subpopulations, so white men, white women, black men, black women, in the extent to which our provided forecasts result in anchored expectations. And what we mean by that is just a simple indicator that equals 1. If now my individual survey participant puts the most probability mass on the bin in the subjective distribution, which covers one of the 2 forecasts that we provide from the survey of economic projections. Let's say that I participate in the survey and there's a bin that is between 8 and 10% of the unemployment rate over the next 12 months. I put most probability mass on that bin, then the indicator would be equal to 1. It's just a simple graphical way of indicating the extent to which individuals would incorporate the information we provide from the survey of economic projections in their own subjective forecast. Now, of course, we have way more information from the whole subjective distribution, and so we also directly see to which extent individuals adjust their mean expectations for inflation and the unemployment rate, but actually I refer to the paper for details. Now what we want to do is just actually compare the treatment effect of providing information, seeing different policymakers relative to not seeing any information. Next, please. So here in this graph, we now just plot the share of survey participants within individual subpopulations that actually has anchored expectations according to our definition. So here first, white survey respondents. In dark gray, we have male respondents. In light gray, we have female respondents. And so here, the first thing I want to draw your attention to, if you look at the 2 left bars, those are survey participants not receiving any information. And compare those to all the other bars to the right, we see that actually providing information is useful in anchoring expectations to the extent that everyone in the treatment groups, independent of whether it's Parkin, Bostich, or Daly, has actually a higher share of anchored expectations relative to survey participants that do not see any information. Then the second thing I want to stress, let's say we focus now on female participants in the survey. If you compare the response in the control group relative to Thomas Parkin, you see a treatment effect of 16 percentage points. Now, however, if you compare the share of anchored expectations in the Daly and Bostich treatment groups, you see that the share of anchored expectations is about 25 for Mary Daly and 50% higher for female participants in these 2 treatment arms relative to when they see Thomas Parkin. Let's just recall, we see identical information. The only thing that differs is that we as researchers make salient the presence of Mary Daly or Raphael Bostich relative to Thomas Parkin. Third thing I want to highlight is that actually, if you look at the male respondents for Parkin, Bostich, and Daly, similar height of the bar, just showing that there is no differential effect across treatment arms, or saying it differently, white men are not put off when they see diverse representation on the FOMC. Next slide. Now here, same setup. This time we focus on black survey respondents, dark gray men, light gray women. So here what you see is similar qualitative pattern than before. However, this time let's focus on black women first. Treatment effect of getting information when they see Parkin, 4 percentage points. Instead, when they see Raphael Bostich, treatment effect is 10 percentage points. And finally, if they see actually Mary Daly, the treatment effect is 16 percentage points, so 4 times larger than when they see Thomas Barkin. And instead, we see for black male respondents roughly equal response across different treatment arms. So here again, we see that making salient the diverse representation has a big impact on the share of survey participants that has anchored expectations here for the subsample of black female survey respondents. And for inflation and this quantitative mean expectations, we see similar patterns. Next, please. Now, in the last few minutes, I want to briefly shed some light on channels that might mediate these effects. And the first one is actually a trust channel. Next, please. And so here we actually just document the distribution of answers for the control group. Recall they didn't see any picture of a policymaker, meaning that I think this is equal to an unconditional distribution. And here we compare in gray, white male respondents' responses versus everyone else. And here 7 means high level of trust, 1 means low level of trust. And for both trust outcomes, adequately managing inflation and the unemployment rate, caring about the well-being of all Americans, we do see that while male survey respondents have unconditionally a higher level of trust. Now what we want to see is, do black and female survey respondents become more trustful once they see minority representation and diverse policymakers on the FOMC? Next slide. And so here what we do, we focus on the share of survey participants with a low level of trust, meaning that they have an answer of 1, 2, 3, so they have very little trust. And now if it's indeed the case that women and black survey respondents become more trustful, we would expect a lower bar, so to speak. And that's effectively what we see. Left figure, white survey respondents, female respondents actually have a lower level of distrust when they see Raphael Bostich or Mary Daly relative to seeing Thomas Barkin. Black female respondents similarly like a 6 or a percentage point lower level of distrust when they see Bostich and Daly relative to Barkin, and similarly for black male respondents about 8 or 9 percentage point lower level of distrust when they see Mary Daly or Raphael Bostich. Next, please. So we saw that one channel that actually increases the extent to why people incorporate information from the Fed when they see diversity representation is a higher level of trust. Alternatively, and complementary, it could also be the case that, ex ante, if I see that it's all white men on the FOMC, I might be less interested in gathering information and caring about monetary policy making than when I make salient the representation, let's say, of women on the FOMC. And so what we do here is first actually documenting indeed ex ante before we highlight that Raphael Bostich and Mary Daly are member on the FOMC in June of last year. We see that ex ante lower level of knowledge about basic pillars of policy making among women and among black survey respondents. So again, there's some scope potentially for this channel. Next, please. So what we now do to see direct evidence that, let's say, women become more interested in actively gathering information about monetary policy making is through actually a follow-up survey that we did 6 weeks after our initial survey in October of last year, where we just elicited very similar questions than in our main survey. And then the key part of that follow-up survey was an information acquisition experiment, where we this time randomly split survey participants into 3 different groups. And we told them, before you continue in the survey, we want to give you a choice between 2 different articles and subsequently elicit a few more questions. The first group just had a choice between 2 institutions, CBO, Federal Reserve. The second group had a choice between Phil Swagel, and we highlighted Mr. Swagel, from the CBO versus Mr. Clarida from the Fed. So here this time, again, same institutions, but choice to read an article about 2 male policymakers from separate institutions.
Michael, you have 2 minutes left.
Thank you. And the last group had a choice between Mr. Swagel from the CBO and Michelle Bowman from the Fed. And then we wanted to understand whether women are differentially more likely to choose the article about the Fed in group 3 when we highlight there's an article about a female policymaker relative to having the choice between 2 male policymakers in 2 groups and just between the institutions in group 1. Next, please. That's indeed what we find. So here we split the sample in male respondents and female respondents, left and right panel, 3 different groups, the institutions group, the male policymaker group, and the female policymakers group. And what we plot here is the share of survey respondents that chose the article about the Fed relative to the article about the CBO. What you see here, if you compare the far right histogram, women choosing the Fed article in group 3, you see that women are about 10 percentage point more likely to choose an article about the Fed when actually it's about a female policymaker, then women actually choosing the article about a Fed when it's about a male policymaker instead of a male policymaker in the CBO. This also holds true if you compare it to the difference for male survey respondents. So what we call here the double difference is about 10 percentage points, so a substantially larger share of women chooses to acquire information about monetary policy making when actually we highlight that it's about a female policymaker. Next, please. And so in the paper, we directly show that us making salient the presence of Mary Daly or Raphael Bostic indeed increases the perceived presence of minority and female policymakers on the FOMC. That's actually true independent of gender and race. Even white men update upwards their presence of female or minority representations. And also we show that it's not the case that people react more to seeing Mary Daly because Mary Daly is very well known and people recognize her. Across the board, there is actually an equal level of recognition. And then before concluding, I want to actually show you
so Michael, your mine is
next.
you
Yes,
want to
I'm about to wrap up. So we just directly show that our results are more consistent with what we call taste for diversity instead of homophily. Next. And so here we just show that, if you compare this time, like to which extent do you support quotas, let's say for the FOMC, this time you see white men very much against it, instead everyone else in favor of it. And so let me conclude. Next, please. So what we do in the paper is we try to understand whether actually having a more diverse composition on important policy bodies like the Federal Open Market Committee might actually improve policy making through a communication channel. And especially we document that female and Black survey participants are more likely to incorporate identical information into their own forecast when we make salient Mary Daly or Raphael Bostic on the FOMC. They have a higher level of trust subsequently and are more likely to acquire information about monetary policy making. There's no offsetting effect on white men. And of course, there's still lots of things to be learned, like, what is the optimal degree of diversity in these things. And we have nothing to say in our current setup of the survey. Thank you. Now I'm looking forward to Randy's discussion.
Thank you, Michael. We're discussing Randall Aki from University of California, Los Angeles. Michael, Randy, you have also 10 minutes, and I will give you polite reminder when you have 2 minutes left. The floor is yours.
Great. Thank you for having me. Next slide, please. Great. So the research design is, it's a really wonderful one. It's a randomized control trial, about 9,000 participants. So, really nice size survey. Again, the idea is to understand how race or gender of the FOMC affects the public's unemployment forecasts, inflation forecasts, and trust in the Federal Reserve Bank. And what primarily the work that was done was that reports were provided to participants, survey participants, and they randomized the FOMC's photo. And again, there were 3 treatments, Thomas Barkin, Raphael Bostic, and Mary Daly. And there was a control group where the same report was provided, but there was no photo. Next slide, please. And what they find is that white women and Black women form unemployment forecasts within the FOMC's forecasts when Bostic or Daly are shown. And the agreement is lower when there's no photo provided. And Black men are more likely to form agreement when Bostic is shown. And interestingly, they find no results for Hispanics. And one of the, really useful or perhaps potentially useful results is that there are no negative effects on white men. There's no backlash or there's no sort of anti-diversity sentiment, what have you, at least in their study for now. Next slide, please. And they also find that female and Black subjects have less distrust when either Daly or Bostic are shown. They use a Likert scale for this. And for Hispanic respondents whose ethnic group, again, they note this explicitly. This was not part of the research design, not represented on the FOMC. They detect different patterns. Hispanic men tend to be more distrustful actually when exposed to a female or non-white FOMC member. So again, interesting results that have come out of the research. Next slide, please. And so what I thought was quite interesting, and the work that was done by the authors was to try to explain some of these, these results. And they really had these two hypotheses, which are quite interesting and quite plausible. One is homophily, or a taste for, that's one mechanism, sort of, your own group. And the other is a taste for diversity, sort of preference for just a diverse group of decision makers. And they conclude that there's a taste for diversity are potentially probably driving the results. And they base this on some, pretty sound reasoning. The fact that female and Black subjects react similarly to Daly and Bostic, and homophily would say that they should respond actually better or more in a substantial way to their own group, either a female or a Black subject FOMC member. And there's little evidence that there was differences amongst those two populations. Next slide, please. So I find that interesting, and I find it, sort of compelling, but I still think that there might be some more to think a little bit about. So one again result that I noted earlier is that there's no adverse impact of diversity on the beliefs of non-Hispanic white men, and that result is sort of a useful result, because it means that increasing diversity may mean that there isn't a backlash and there isn't sort of a cost to bear, perhaps. And the authors note that perhaps this is because the non-Hispanic white men who are being surveyed believe that still the majority of the FOMC is influenced primarily by white men. And so one of the pieces of evidence that the authors use to show that that's possibly not the case is that female and Black subjects should not react to diversity salience either because they would think a white male majority drives the decisions. Next click. But perhaps this perception of diversity that by the group of female and Black subject is that some diversity is better than none. Therefore, they don't have to believe, their belief doesn't have to be as symmetric as it is for white men, white male subjects. So that, there's this, anything is better than nothing sort of a situation. And so they can still perceive that the FOMC is, primarily comprised of white males, but having some voice on that FOMC is again, useful for them. So again, that symmetry doesn't immediately speak to me. Next slide, or not, yeah. And then second, another piece of evidence that the authors use is that many treated white men in our manipulation check report a perceived FOMC demographic composition in which white men are not the absolute majority. So again, trying to validate the fact that the perceptions of the white male subjects being surveyed, don't necessarily believe that the white men are the majority of the FOMC, and I think that's useful. I do think that though, and I think speaker just mentioned this as well, that we don't know the appropriate threshold. Next bullet point. Yeah, it's probably quite difficult to know where the threshold is, but nevertheless, there still might be sort of this perception that the majority of the FOMC is governed by white males. And so I do question whether that's sort of in the back of the white male subjects' views at this point. And again, I don't think that's testable here. I don't think it's possible, but I do think that might play some influence. That again, one or two individuals does not dominate the decision making, and therefore may not change the perception of white male subjects, survey subjects here. But again, it's difficult to disentangle here. Next slide. And so, and the other part that was really fascinating and, a little underpowered, because because of the sample size, was the response from Hispanic population. And so again, potentially it's due to just the relatively small sample. But the part that I really wanted to emphasize is that race for this group was not considered. And Hispanic/Latino is an ethnic group and it's not a race. And so it's hard to know which group this would actually more align with if race were considered in this scenario for this population. So, the question is if they were included with the Black population or the white population or an indigenous population, perhaps, would they be sort of more aligned with the existing results you found, and or would they add additional power because of more observations to those different groups? So I would emphasize thinking a little bit about that in the future. These aren't, because Hispanic doesn't mutually exclude one from being one or the other race. And again, it would be something that would be worth thinking a little bit more in depth about, because these are all socially constructed categories anyway. Next bullet. Yeah, and overall, it leads me to wonder if different things might be salient to different populations in terms of representation. And so, again, this is not part of the research, but this is something that makes me think a little bit broader on what this research.
You have 2 minutes left, sorry.
Sorry?
2 minutes left. 2 minutes left.
Okay, yeah, I think this is my last slide. Overall, this is what sort of inspired this research. I think inspires other thoughts, is that perhaps in some cases race matters for certain groups or populations. Other times it's gender. It could be ethnicity, as Hispanic ethnicity. It could be sexual orientation. It could be language saliency, right? Does one speak Spanish? Does one speak English? Does one speak French? Depending on the location you're talking about. And those sorts of congruence of reference groups might matter in different, again, different situations, different populations, different organizations. Or is there a hierarchy? Does it sort of cascade downward? One is of primary importance to me and then a secondary. And again, this research wasn't intended to do that. But again, I think, it was really nice because it inspired these thoughts of, I wonder how this functions here. And I wonder how this functions for this population in particular. Next slide. I think that must be it. So again, I thank you very much. It was a really interesting paper, and I really applaud the work taking this on.
Thank you, Randy. So now I will open the floor for questions. Please raise your virtual hand. When called upon, you'll be moved from attendee to panelist. And please turn on your camera and unmute yourself. We have a limited time, and so please be brief when asking your question. When you finish speaking, please mute yourself. So I don't see any question yet. So maybe Michael can answer some of the comment of Randall.
Yeah, Randall, first of all, thank you so much for a great and super insightful and helpful discussion for us. Actually, thinking about these questions will certainly help us actually improve the paper. So like a couple of thoughts actually to some of the important points you raised. So like, why don't we see this, what we call in the paper, putting off effect for white men? So like, if it's indeed this heterogeneous taste for diversity, rather than, they anyway know they have the majority on the FOMC and might just in this manipulation check where we show that it doesn't seem to be the case, potentially lie, or just want to what's sometimes called like, a kind of an experimenter demand effect. We want to please the experimenter. What we actually do show now is that even within the sample of white men, if this heterogeneous taste for diversity is true, we might see that more, let's call it progressive or liberal white men might actually also react more strongly to seeing Mary Daly or Raphael Bostic relative to seeing Thomas Barkin. And so we use different proxies, for example, like, are white men declaring they support the Black Lives Matter movement? Do you think that women are discriminated in the US? Are they stating they lean towards the Democratic Party, rather Republican, and younger than, let's say, I think 40 years? And across the range of proxies, we indeed find that white men that seem to be more progressive according to these proxies are in fact indeed actually reacting more strongly in the sense of incorporating the information into their own forecast when they see Mary Daly or Raphael Bostich relative to Thomas Barkin. Now, I don't know, I see a hand up, so maybe I can come back to Randy's comments afterwards.
Yeah, thank you, Michael. There's two hands right now. So the first hand is Chara Scotty. Chara, you want to come in?
Yes, hi. So Michael, very interesting paper. I really enjoy listening to it. You might have touched upon this, but I was wondering, and sorry if I missed it, but I was wondering if you could elaborate a little bit on, whether there is a threshold or like how, how much diversity you actually need to get to a good spot. And whether you have in mind any way to actually assess whether a little bit of diversity has the same impact as a lot of diversity, whether you just need a little bit or more than that.
Yeah, Chiara, that's actually a super important comment. And so in our current setting, unfortunately, we cannot really answer that because we only show that there is some representation, let's say, of women or of African American on the FOMC. But in this type of survey experiments, what is crucial is that you have to provide truthful information. So we could not, artificially now show a picture, let's say, of a Native American or of an Asian American and state that this person was on the FOMC if it was in fact actually, if he was actually or she was not. So it's a little bit limited in the extent to which we can actually indeed show what the optimal degree of diversity is. But we definitely are thinking among our us authors whether maybe we can show a picture of Mary Daly jointly with, let's say, maybe Raphael Bostich to see actually whether it's showing both of them together or whether maybe some different combinations, let's say, also Michelle Bowman and Mary Daly, actually two women together might make a differential role. But so far, actually, we just state that it would be crucial to better understand what the optimal degree is. But our initial aim was first documenting the extent to which actually showcasing the diversity would actually matter for the efficiency of monetary policy communication. But definitely a super important question.
Thank you, Michael. So the next person is Xiao Hishin. Sorry if I mispronounce your name. So now
No
you come in.
worries.
Yeah.
Thank you. My name is Choi Shin. I'm an economist at the board. Thanks for the great talk and a wonderful discussion. So trust and attention are mentioned here as potential channels. At the same time, for instance, at the Glasgow climate talks, there's a lot of mention on not only the generation, but also gender gap. Can differences in terms of policy interests and preferences also contribute to the results?
It's such an important comment and question. So we do indeed see that, from an ex-ante perspective, if you look at the expectations for the employment rate and the inflation rate, there are systematic differences across gender and across race in our setting. So that's why we in our regression framework, which we didn't show today, also directly condition for prior knowledge, for prior expectations. And you still see that, let's say, women and African American survey participants incorporate the identical provided information to a larger extent when they see Raphael Bostich and Mary Daly relative to Thomas Barkin. So it's indeed important, but actually we show that making salient the representation matters over and above.
Thank you, Michael. Now the next person is Liz Evans. Please go ahead with your question.
Hi there. Thank you for the great paper and presentation. So with regard to the little response from the Hispanic population and also not including the racial identity of the Hispanic population, what are your plans to capture that in the further research? Do you plan to include for Afro-Latinos and Afro-Arabs and the growing identification of multiculturalism that exists within our population?
Yeah, Liz, those are all important considerations and questions for additional research we plan to do. In our setting, we were to some extent constrained based on the actual composition of the FOMC. in June of last year, because we wanted to make sure that everyone we show has an identical official title, was a regional Fed president, but crucially also was a non-voting or alternate member as of that meeting. So therefore, we effectively were limited by to choose Raphael Bostich and Mary Daly. We couldn't also choose, let's say, I think as Randall was mentioning to some extent, let's say a Latino policymaker, because we didn't have a Latino policymaker that was a non-voting member of the FOMC of June of last year. And then, of course, if you would actually want to go into even subgroups that actually are currently not represented, we would actually have a hard time in actually doing it in our current research setting, which of course doesn't mean that once you go away from understanding the role of diversity on expectations formation and trust, that you couldn't do that. It's just within the domain of the FOMC, we are limited what we can do. But I totally agree that it's crucial and important to study these questions.
Thank you, Michael. Now the next person is Michael Herman with your question.
Yeah, thank you very much. Michael, this is probably less a comment to you because I've made this comment to you already earlier on when I discussed this paper already, but there's so many central banks here on this organizing committee that I want to make it again. And maybe, Michael, you do want to take this up in future research. I mean, one thing that struck me here is, you show pictures of policymakers. Now, of course, by definition, we have very few underrepresented groups as policymakers, whereas we have many more members of underrepresented groups at the staff level. So I think it would be really interesting to sort of see, what is the difference between getting the statement and the logo of a central bank, and then getting the statement and a picture of a staff member, and the statement and the picture of a policymaker, to understand, to what extent do you need the authority that comes from the office? To what extent can we also send out our staff, where we have a lot more diversity, to actually be an ambassador for our central banks and generate trust and sort of, instill knowledge about the central banks? To me, that would be really a great experiment to do. I understand you cannot do this in the current paper, but I think that would be interesting. Thank you.
Yeah, let me just echo and totally, agree with what Michael Ehrmann was saying, that it is certainly, a little bit away from our current setup, crucially to understand, the identity of the center, to which extent it matters, and going to staff economists and actually exploiting here the larger extent of diversity compared to the official policy making body. Maybe actually one thing I briefly want to touch upon, given that we didn't mention it. So we do see very stronger effects for the unemployment rate than for the inflation rate. And so our reading of that result is that while we do see, for example, huge differences in the realized unemployment rate by race and gender, when you look at realized inflation by race and gender, in fact, actually it differs way less, and actually unconditional, there's no difference by race and gender, which to us actually potentially means that for variables where it's actually, we see stark differences, it is crucial to have people in the room when making decisions that actually represent these different experiences and backgrounds, for the extent for which people think actually that they have a chair at the table. So I think it's crucial not only to, I agree with you, Michael, to understand also for staff economists, but that's why we focus first in our setup on the actual decision-making body, because it seems to play a role in some extent, to some extent in which people react.
Okay, so I think we have, there's no more hand, but the Randall has his hand. Maybe very quickly, 1 minute at most.
Thank you. I just was going to emphasize, I was going to say the exact same thing Michael Ehrmann just said, that, from the outside, most people don't have a perception of the difference of, the functioning of the FOMC versus the Federal Reserve Bank. So it does seem really a cool opportunity to be able to increase the diversity by using a staff economist of, a diverse types of background to enlarge the pool of candidates for our future study, for instance. So yeah, I think that's a really, really great idea.
And also it may be interesting also to do for the central bank like the ECB and Bank of England, other central bank, to see if these features also is just US too. That would be cross country. Okay, that's a good transition. Thank you very much to presenters and discussant, and as well as with participant for questions. So we're going to the second presenter. The second presenter is Paola Profeta from Bocconi University. She will present the paper, "Do Women Matter in Policy, Monetary Policy Board?" Paola, again, you have 20 minutes, and I will give you a polite reminder when you have 2 minutes left. The floor is yours. Thanks.
Thank you very much for the introduction, and thank you very much for giving me the possibility to present this paper today. This is a joint paper with Donato Marcendaro and Davide Romelli. They are the experts in monetary policy. I am the expert in gender economics. So we joined our forces and tried to answer this question: do women matter in monetary policy boards? So next slide, please. In order to motivate our paper, we start from a simple observation. So there is an increasing representation of women in central banks, especially in top positions of central banks. And this has been constant during the very recent period. So today we have more than 15 central banks that are headed by women, and this is quite different from the past. So there is also a lot of attention from researchers and in general also from the policy debate about how the representation in terms of gender composition of committees in general, or representation of women in institutional positions may have any relationship or even impact, if you're able to identify a causal relationship, on outcomes. For example, on policy making, on the agenda which is decided, etc. So we have not found a precise paper and analysis with respect to monetary policy decision making, although there is a lot of interest in research, in recent research, on the effects of board composition with respect to this outcome. And there is also this general, let's say, idea, which is shared by many, that diversity or heterogeneity may be beneficial for the outcomes, for enlarging perspectives, for taking decisions, and in general for a different style of leadership in decision-making positions. So we try to apply this to the context of monetary policy. Of course, there is also a lot of attention, in particular by a very large literature on women representation in corporate boards. And so if you give me next, okay, thank you. And corporate boards, we know quite a lot now, because we have seen several papers trying to understand whether women matter and the presence of women matter in corporate boards. In particular, thanks to the introduction of board gender quotas in several contexts, we know we are also able to identify somehow causal effects from the presence of women in board gender balanced leadership and several outcomes. But while this is something that we have seen in the literature of corporate boards, we don't know a lot about central banks. So basically our question is, what is the relationship between the gender composition of monetary policy committees and monetary policy decisions? And what I'm going to present, I mean, the paper that we're going to present is more, has a contribution more on the descriptive side, in the sense that we collect a lot of data and deliver information and a kind of picture of the presence of women in monetary policy committees and monetary policy decisions. We are not able to identify causal effect, but we are able to give you a broad picture of, let's say, women's representation in this context, which is particularly important because, as we know, deciding upon monetary policy is particularly critical for the economies worldwide. So our contribution will mainly be on a collection of data on women in central banking, which, as you probably know, are not immediately available. So this is not an easy task. So in the next slide, okay, I will present you, let's say, the major contribution of these papers. First of all, as I told you, we are going to present a new data set, which is quite complete and precise in terms of information related to the members of monetary policy committees in 86 countries. So we managed to reach a large number of countries. And for the period from 2001 to 2017, we also managed to reach a large amount of time, although probably less than what we initially planned. So I'm going to present you a measure of gender representation in central bank boards for this large sample of countries, and also evolution over time, which is the picture that I plan to present today. Then we make some additional effort with respect to this descriptive contribution, which is to investigate what are the main drivers for this increased presence of women in central banks. We will see that there is an increasing trend, so that the presence of women is increasing in this position. And we would like to understand whether there are some regularities or some characteristics that systematically are associated with the increasing presence of women in central banks across countries. And then I'm also trying to draw some implications for the conduct of monetary policy. Of course, this part is also not completely an identified causal relationship, as I said, but interesting correlations. So let me go to the next slide to tell you how we position this paper into the large literature on, let's say, women's representation in decision-making positions, which is a large literature. It's also very interdisciplinary because we have contribution across different disciplines. For example, not only economics and finance, but also management, but also in political science. For example, there is a lot in terms of studying the presence of women in decision-making positions. And what we know so far from the literature, more specifically on monetary policy committees, is, for example, that there are contributions that try to understand what's the value of diversified boards, or diverse boards, or heterogeneity, for example, and what are the regularities associated with the heterogeneities, what is the impact of educational career, tenure, or internal versus external members on the voting behavior, and also with respect to the popular, approach, which is we would like to understand whether men versus women have a more hawkish versus dovish attitude. So theoretically, this is not so clear, because on one side, we would expect that the women have more dovish attitude, so they care more about unemployment rather than inflation. But on the other side, we also know that women are somehow scarce, and scarcity is represented in this position, and so probably having a more hawkish reputation is easier for them to be somehow appointed to this decision-making positions. So at the end, it's an empirical story which we would like to also contribute to explain. The dissenting behavior of female members is also well documented by a previous paper. And as I told you before, we also related to a large trend of gender diversity and the presence of women on corporate governance, on boards of directors. For example, I have worked extensively on the presence on the introduction of board gender quotas, in particular in Italy, and the fact that this has, and in this case we can talk about causal impact, and the fact that the introduction of board gender quotas has, for example, in particular on the selection of the board, so the characteristics of the board, so the qualification and the other characteristics in terms of selections, and also on the outcomes in terms of performance, but also in terms of stock market reaction. And we also know that there is a large literature, for example, related to risk preferences. So women tend to be more risk averse than men, and this has been used as one of the arguments. Of course, there are a lot of caveats now with respect to this basic statement. And this has been used several times as an argument to understand why women do not reach top positions, or somehow it's one of the explanations behind the existence of the so-called glass ceiling. So as I said, we are going to contribute mainly in the broad literature of women's representation in decision-making position, and in particular in the context of monetary policy. Next slide. This is already the first, let's say, type of result that I'm going to present you, which is, as I said, a representation of the situation. So basically here you see the share of women in monetary policy committees. In this picture, we represented the situation in 2017, but we have data that are reported, of course, in the paper for the entire time span from 2001 to 2017, and we have 86 countries. And you see that there is a large variation across countries. There is, this geographical distribution. So it's pretty evident that there are countries, almost 50% of the countries where the monetary committees do not include any women, so it's zero. The average share is around 15%. There are countries, for example, such as Canada or Norway, with a very high share, so between 50% and 60%, but also other countries that have the same percentages. So this is a first picture. How do we get? Did we get to this picture? Of course, it was not easy. It was mainly a work of manually collecting information, which are sparse, not organized, and not easily accessible. So basically, the main challenge for our work was really to construct the data set, which I hope will be useful now, let's say in general, also for other research. And so we had to go into the directories and identify the members of the boards, and also identify their gender. And many times we had to search manually for a picture or for other information, because those are not available in the directories. And so just to give you an idea, in the next slide, this is the information available, for example, in central bank directories and statutes for the UK, where you see what type of information is reported. So we have the name, basically, of the governor and deputy governors and the members of the monetary policy committees. We only have the names, so then we have to reconstruct the other characteristics, in particular the gender. Next slide, please. This is another example of the type of information, the type of data that we have dealt with. And in this case, we have Norway and the source is the central bank annual reports. And the next one. In other cases, for example, here we have Ethiopia and Kenya. We have the pictures of the members. So in this case, you also know if they are men or women. Okay, so if we go to the next slide, I can show you the other important result from this collection of data, which is the evolution over time, which actually confirms our expectations. So basically, across time, we have moved from, on average, 11% of women in monetary policy committees in central banks to the current level, let's say in 2017, where we stopped the data collection at around 17%. The size, it's important to say that the size of the committee has remained very stable. So this really means that there is an increase of the presence of women. In the next slide, we see a similar increase also for the share of women acting as governor or deputy governor. And even in this case, the increase is from less than 5-6% up to 15%. For example, if we look at the governor, and deputy governor is even a little bit higher. So we have in this period of time really a big change in terms of an increasing presence of women, in terms of increasing diversity, and these numbers are really, let's say, showing the picture. So this is one of the characteristics. This is something that we can find also in other contexts, not only in monetary policy boards, but I think it's also important if we can measure this type of progress. In the next slide, I give you some additional couple of pictures of the data from the data that we collected. In this case, we present the percentage of women on monetary policy committees that never had a woman for the period 2000 to 2016, and so I compare with those with one woman and those with two or more women. And basically, you can see here from the picture that the increase is driven mainly or mostly by central banks that already had two or more women in monetary policy committees that increased even more, rather than those with zero, which remained a quite stable percentage, remained at quite stable level. So if things start to move and so there is an increase in presence, then it's easier also to increase even more, rather than starting, let's say, from zero. So this is also something that I think is interesting in terms of the dynamic of this gender balance representation. The next one presents you a division by region, and here it is clear that North America has the higher share of women in those positions, followed by South Africa. And so if you divide by region, while, for example, South America lags really behind with respect to the rest of the other parts of the world. And we also see some heterogeneity by income groups. So the low-income countries have a higher share. This is probably driven by South Africa, and then the middle, and then also the high. And you also, if you compare from 2002 and 2016 in terms of the evolution, there are also interesting heterogeneity. So let me move to the next part of the analysis, let's say. So that says, then in the paper, you also find the additional, let's say, descriptive evidence of the data set. And as I said, I hope that the data set will be useful in general to assess and really measure the progress in terms of women's representation in one of these dimensions, which is monetary policy, which is particularly important for our economies. Then what we do in the next step is to try, as I mentioned before, try to understand if there are some irregularities or some factors, or somehow some variables which are significantly related to the share of women in monetary policy committees. And here we investigate in particular several variables. I mean, depending on the data that we have collected, we have, for example, a variable which captures the staff gender ratio. So how many women in general are employed in the central banks. The country gender equality index from the World Economic Forum. The World Economic Forum every year builds an indicator that captures gender equality according to several dimensions, and a synthetic indicator for.
Sorry, Paula, you have 2 minutes left.
Yes, for the indicators. An indicator of central bank independence and other variables. So in the next slide, you see the first results of this. And in this case, the next slide, please. What I see is that basically all these variables do not show any significant relationship with the share of women in monetary policy committee, apart from the staff gender ratio. You have different columns because we have some controls. This is fixed effect, country fixed effect, time fixed effect variation. So it's a little bit demanding. A specification still is a correlation. So we find a relationship only with the staff generation. Next slide, please. So this is the second part of the analysis, which is once we have this women in this position, what we can say about, let's say, the outcome of performance or what they do. And what we do is to estimate a standard Taylor rule where the dependent variable is the interest rate, target interest rate in each period, and see how this depends on both the inflation, the output gap, the lagged policy rate, and we augment the standard interest with the share of women and an interaction between the share of women and inflation. And you see here, what is interesting is that this interaction terms turned out to be significant, positively significant. So it means that for the same level of inflation, countries with more women are more likely to set higher interest rates. So in other terms, to have a more hawkish approach with respect to men. So to be more aggressive in fighting inflation. And this is the main result of this part. Of course, we run several robustness checks that I'm not able to explain now because I am a little bit late. So we run not only an ordinal least square, but also GMM. We use annual data, but we also use quarterly data. And in the next slide, you see that the result is the same if we use, for example, a dummy, which is equal to 1 if the monetary policy board has at least a woman present and 0 otherwise. The results are confirmed. In the next slide, the results is confirmed also if we use the unemployment gap instead of the output gap.
Sorry. Maybe you want to wrap up? We basically out of time.
Yes, I am done. And then in the next one is more robustness test that you find in the paper. So my last slide, which is the next one, is we try to test this a little bit more precisely, looking at the Swedish Central Bank, where we have detailed information on the rate proposed by each member of the Monetary Policy Committee in each meeting from 2000 to 2017. So there are around 125 meetings, 733 policy changes, and the 18 members, 10 are men and 8 are women. And in this case, we look at age and we look at gender. Basically, age does not have any significant relationship with the voting process. So with the policy rate proposed by members of the board. While if we look at age, we can and gender, we can confirm.
Paola, you may have to wrap up. Sorry about that. Yeah. We have to wrap up. Yeah.
Yes, it was my last word. I have a last slide with the conclusions, but if I don't have time, I think that I can stop here.
Okay. Thank you very much, Paola. And the discussant is Michael Ehrman from the European Central Bank ECB. Michael, you have 10 minutes, and please go, and I will give you a polite reminder we have 2 minutes left.
Okay, thank you very much. Thanks a lot for having me here and assigning me this very interesting paper, Paola. I think this is really a great paper. Obviously, everything I'm going to say here are my own personal views, not those of the ECB. So next slide, please. So I think it became very clear in Paola's presentation, the big asset underlying this paper is the data set. I mean, it's very rich. I think this was a lot of hard work. It's not easy to actually dig up all this information. I think this is a big asset. And, this generates a lot of appetite for more analysis. So, I think this is mainly what I want to focus on in my remarks here. I think right now the paper is relatively narrow. In particular, if you compare this with the title of the paper, which is very broad. The question is, do women matter in monetary policy boards? I presume your answer would be yes, but then of course we want to understand why and how does this matter and in what dimensions. So it's a very broad question, and I think right now the analysis is very narrow. I think you can do a lot more with the data that you already have, and this is mainly the thrust of my comments. So next slide, please. So the first part of the paper is basically a descriptive analysis of the data set, and Paula spent most of her presentation on this because, again, this is the big asset of the paper. Now, I was struck a little bit about the tone of the paper. So the first sentence in the paper is, women are increasingly represented in central banks, full stop. So, and in the abstract, you also have this sentence, you know, we document an increasing share of women in monetary policy committees. This is of course true, and you know, this is very positive, but I think, you know, you might want to balance this a little bit more by also talking about the levels that you find with your data. So, you know, the trend is positive, the trend is increasing, but the levels are amazing, are impressive. I mean, you've shown this these numbers. Actually, the version of the paper that I have has a different number of central banks and a different sample period. So maybe, you know, not all of my numbers will now add up with what you've been showing. But over 15 years, among 103 central banks, 20% of MPCs never, ever included a single woman. You know, that is a remarkably low level. And I think that is worth emphasizing also in the paper a little bit more than just focusing on the trend. Next slide. On the data, again, this is, as I said, you know, this is fantastic. I would have liked to see a little bit more clarification, and maybe also there's some double checking to be done. Let me take one example. In the version of the paper that I have, you give the number for Canada you give numbers for 2016 for all those countries. One of them is Canada, and both Cesar and I worked at the Bank of Canada in 2016. So I picked this as an example. If I'm not mistaken, the board composition, the MPC composition was the following males: Governor Polos, Tim Lane, Sylvain Leduc joined in May 2016, and Larry Shembri was there the entire year. Females were Senior Deputy Governor Caroline Wilkins, Agathe Coté was there until February, and Lynn Patterson throughout the entire year. So that made me think about a couple of questions. You know, how does your data set handle empty seats? How do you handle transitions within a year? So the number that you have in the appendix table A for Canada is 33%. So then from there, I take it that you take the snapshot at the year end, because at the year end, you know, a third of the MPC was female. Now you could do a weighted average that would bring you to 37%. You could simply count all the names over the entire year. That would bring you to 43%. Or actually what I now realize, you could also do obviously the beginning of the year, which would bring you to 50%. Now, table A1 has a number of 33%. The figure that you show shows Canada to be between 40 and 60%. So this is why I think some double checking would need to be done here. And I think it would be important to clarify how exactly you measure these data. Next slide, please. So then the first set of results in the next section is, let's explain female representation. And Paula has shown, this is a subset of the tables she has shown, and you know, she already commented on the staff gender ratio is the only one that comes out significantly. So then, of course, my first question would have been, you know, what explains the staff gender ratio? Can we do a little bit more analysis on that variable? You seem to have it, so you know, maybe that helps us understand a little bit better what's going on. The second variable that doesn't work is the gender gap index. So this is the World Economic Forum's index, if I understand correctly. I checked their website. They have an overall index, which I presume is not what you want to use, because that also includes a gender gap with regard to health and survival and with regard to educational attainment. And the World Economic Forum, when commenting on this index, they argued that, you know, these are largely closed. So the relevant area where gender gaps still arise in your sample are probably economic participation and opportunity and political empowerment. So I would be curious to know which one you have tried, you know, which one it is. We see here whether others work better. And maybe, you know, you can think about other potential determinants. What about the share of females in government, the share of females in parliament? Is there a female prime minister at the time of nomination of these board members? So, you know, I would really encourage you to dig a little bit deeper into these interesting results. Next slide, please. And then the next part of the paper goes into interest rate setting. So, the authors are doing something very courageous here. It's hard to estimate Taylor rules for an individual country because ideally you want real-time information, forward-looking information. This is impossible to do on an international panel data. So I think what the authors do is fine. But what I haven't understood is, so they introduce this variable of female participation, and then they interact this variable with inflation. And there's very little sort of underlying reasoning why this particular variable is interacted. What is the hypothesis? Why should MPCs with females on average be more hawkish? For instance, I could imagine this depends on the mandate of the central bank. I mean, you mentioned in your presentation, they might be more aggressive. Well, if you have a dual mandate, are they more aggressive on inflation or on unemployment? That's ex ante not clear to me why they would need to be seen as more hawkish on inflation. So some more hypothesis development in the paper, I think, would be welcome. And I think your data would be fantastic to help us understand why the existing literature is inconclusive. So there is papers on the FOMC, which tends to find that females are more dovish. Cross-country papers tend to find that females are more hawkish. Maybe that difference is because indeed the FOMC has a dual mandate and most of the others don't. And so I think your data set can help us shed light on this. Next paper, next slide. But then again, I mentioned, why are you interacting with inflation? Why not interacting with the output gap? Are MPCs with females differently responding to the output gap? Is there a different persistence term? You could interact with any of the variables in the Taylor rule. Why did you pick inflation? I think it would be interesting to look at the others. Maybe females look at other variables. Maybe they are more holistic, and that would lead you to larger residuals of your Taylor rules. Another hypothesis you could test. A couple of econometric issues. You use actual inflation as a proxy for inflation expectations, which again, given this data set, I think that's the best you can do. But maybe females are better forecasters than males, and then the quality of the proxy. Okay, the quality of the proxy would be different. You also find that the variable itself, the share of women in the board, has a negative effect on policy rates. I think you want to control for a time effect because at the end of the sample, there's more females and policy rates are lower, which also raises this question, how do you take the effective lower bound into account? Can you do a robustness test by excluding that? Next slide, please. And let me skip that slide. So next slide, please. So as I said, this for me generated a lot of appetite for more research. I already mentioned a couple of more hypotheses on the Taylor rule you could test. Many questions would be interesting to do, but would require a lot more data, like, are the committees more collegial, more open discussions? Is there less groupthink, more diversity? You would require minutes of votes, and you cannot do this. Are they more trusted by citizens? You would require surveys. I don't think you can reasonably do this. But some questions I think you can tackle with your data or with little additional work, like, do they perform better in the sense of bringing inflation closer to target? Is the output gap smaller on average, or more positive, more negative? Are they more open to admitting mistakes? Are they more prone to reverse interest rates? And on the female members themselves, is there any difference in the reappointment probability, in the length of tenure? I think there's a lot of interesting stuff you could do. Next slide. And so that brings me to the conclusion. I think this is a really interesting data set. I want to applaud you for putting all the hard work in there. It would be a fantastic service to the profession to make this data set available. And I just hope you'll do a lot more with this. And I look forward to reading more of your papers on that data set. Thank you.
Thank you, Mike. Thank you, Michael. And thank you, Paola. So now you will go to the Q&As. So please raise your virtual hand, and when called upon, you will be moved from attendee to panelist. Again, please turn on your camera and unmute yourself. You have a limited time, so please be brief in your question. And so when you finish, basically unmute yourself again. So I think so far you have one hand, but maybe I can give an opportunity to Paula to quickly reply to Michael, and then move to the discussion.
Thank you very much. It was great to receive all these comments, and thanks a lot for your comments. Many things are things where we actually are working on. For example, the interaction with the output gap, and also a little bit more the theory behind the results. Others, yes, are things that we have tried. For example, for the World Economic Forum Index, we have tried all the components, and actually I also agree that the economic and political participation are the most important ones, and actually, but the result does not change if you limit to this components. The staff ratio is given. I mean, it's the data that we find in the directories, but of course we don't know what's behind this. So it may be that again, this also depends on the culture of the country, or in general, or you know, on the obstacles to female employment, etc. In the country. So again, on the index. With the data, yes, we took like a kind of strong assumption on the empty seats. So basically attributing them to male. So like those who are empty and that we don't find the positions, so we assume that they are taken by male. Of course, we can change and see how numbers change, relaxing this type of assumptions, but this was consistent somehow in the data set. I also agree that we can find with the share of female in government, in parliaments, etc. We have this data information. Actually, we tried already some things like that. We tried also with some historical variables which have been shown by you know, by the gender economics literature to be important, to be related to current gender gaps and the women's underrepresentation. This is actually an area of research where I have extensively worked for other papers, but it seems that that it's very difficult to find something that is significantly related to this outcome. And at the end, yes, this all our the regressions that I presented have country and time fixed effect. So somehow it's not a cross country. I mean, it's the effect that we are going to identify is within country, but of course, it would be interesting if we end up with the kind of new contribution with respect to the inconclusiveness of the previous results. I have to say that. Even in other, let's say in parallel, when I will have worked, for example, on politicians, so on to see if the presence of women among politicians, so the share of women among in political positions, for example, in government or in local municipalities, where you have also more detailed data, even though at country level, and try to understand how this relate, or if this is any relationship with the outcomes in terms of the policy that are decided, etc. It's always quite tough to find significant results. So it's quite inconclusive also with this respect. So probably the idea is really that you know, diversity is beneficial per se, but it's very difficult to identify the effect of gender balance representation in decision-making positions on a precise outcome when we really want to measure. What is more promising is probably to identify this in terms of style of leadership, but this would require going into the minutes, or you know, how the process works, how decisions are taken, which is much, yes, which is probably where now some research will go, but so far it's a little bit more difficult. With this data set, we are not able to do this. But in general, I have to say, because the similar inconclusive results appear also when we look at women's underrepresentation in politics and the impact on outcomes. So it seems always that there is a different strategy. I mean, at least my understanding, my lesson from this type of research is that it's easier to find a different strategy in terms of long-term horizon, perspective, strategy of approach in making decisions rather than measuring the outcome.
Okay, thank you. You have two two people here for questions. So the first person is Ilkunuz Ude. Please go ahead with your question. Sorry again if I mispronounce your name.
That's all right.
Yeah.
So my name is Ilkner and I'm an economist at the board. So thank you very much for the presentation, Paula. I find it super interesting, especially the data set as Michael put forward. And for some reason, I cannot turn on my camera, but please forgive me for that. So I rather have maybe two suggestions rather than the comments on the econometric specification and clarifying the things. So the first one is that I would use, rather than like try to estimate the interest rates, I would use the deviation of the interest rates from the like expectations, so that this can give you a cleaner interpretation of the women share. This is like on your main regressions, that they are more hawkish. So because clearly the interest rates can increase, not necessarily there were women, but like, you know, other things. And given that the lagged interest rates are super significant, that may help you a bit. And the other one, which you already mentioned on your presentation, the clearly biggest issue is here the endogeneity. And we all know it is super hard to like solve this problem. I don't have a direct solution of it, but I can suggest a paper, which I can as well, happy to send it to you, published in QJE recently, that they are using some sort of an IV estimation and not necessarily an IV estimation, using some 2SLS. I believe that would be a direct fit here. And clearly it can as well like help you to sell the story that there is somewhat a causal effect rather than like a simple correlation. I'm happy to forward the paper to you going forward. Thank you very much again.
Thanks a lot. Yes, and looking forward to see this reference.
Okay, so there is Neil Erickson is the next person. Eric, please go ahead with your question. Neil, sorry. Neil Erickson. Okay. Can see you, but I don't hear you. So the mute is on the left your screen. We don't hear you. So Tim, can you help here?
Neil, you might try selecting another microphone using the caret on the mute button.
Maybe while you're waiting. So one thing that Paula that I thought would be interesting, linked to Michael comment about the fact that the interest rate we see women as hawkish. In more, it could be linked to the expertise too. So the mandate that's if the one aspect, but if a woman that care about more financial stability, if they see that there is low for long, we'll probably worry more. We may worry about low interest rates. So that might affect the behavior in general in terms of how we set policy. So if there's ways to control for that, that might be helpful.
Neil, are you able to come off of mute?
Don't think we can hear or see.
And Neil, if you want
Okay.
to
Any other question when you're waiting for Neil? So is there any way to, regarding my point, can we find an expertise of this? For example, let's take the case that Michael put on for the Bank of Canada. So the two of the women that were there were really financial system oriented. So if only one was more monetary policy, it's true that our mandate is the more financial stability, but that might affect also some of the way we approach or interest rates. Some of them are more concerned about low interest rate than things. So I don't know if there's a possibility for you to collect that data or that information or not. You can look at the CV, you can look at
Yes, exactly. That would require yes, a search through the CV. But you know, for this large sample of countries and numbers, it looks quite unfeasible. Of course, it would be.
For advanced economy is possible. For advanced economy,
Yes, I mean, you can do it, but yes, we wanted also to see, to have some, at least to see what we can find with the data set that we were able to put together. But of course, it can be enriched in several ways. And we also thought about this search through the CVs, at least for a sample of this of our data set. We have not done this so far. Yes.
Okay.
Thank you very much.
No problem. So sorry that we're having technical difficulties here.
Yeah, but I mean, thanks a lot for the comments.
Yeah,
because,
we almost yeah. My friends just came in, so I think Michael and first let's basically conclude this session and thank all the presenters and discussants for the great job, and it's a very good way to start this conference.